Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then, independent investment advisors Vivek Mahani and Sharmila Joshi, along with Vinita Sharma of Narnolia Financial. She's running a little late, but she will join us on the show. But today on Hot Money, we'll discuss L&T Finance and what's aiding the rally apart from a brokerage initiation, and a lot of other reports have come out. We talk about the Adani Group stocks that have seen strong return in the recent past, which is the best play among the Adani Group stock. PVR is another stock which is in focus. It has been a bit of lull of late, but with recent state of strong releases, we discuss what's the outlook for the company. And lastly, we discuss with the analyst one stock they believe will correct in the near future, given the fact that Nifty is trading at record high. So those are the stocks that we'll discuss in today's edition of Hot Money. Let's start with the first one, and that is L&T Finance. Of late, a lot of these NBFCs have started to do well. L&T Finance, no exception. A lot of brokerage reports coming out, a lot of management meetings that are happening. But what's the view on L&T Finance as such and the NBFC space? That's what we'll ask. Sharmila, you like L&T Finance?
Well, not really. And I think that, yes, what we've really seen, as you said rightly, is the fact that a lot of brokerages have turned positive on the stock, and somewhere there is a feeling that perhaps some of there could be a bit of a catch-up between, 2 or 3 sort of NBFC names with somebody like a Bajaj Finance, which is, growing so well. So there is also that broader expectation that there could be some catch-up happening. Also, there have been a couple of positives, or let's say one thing is that they're slightly getting over that, when they said that they'll reclassify their holdings, etc., and market had not taken too kindly to it when we saw that correction. So it's sort of coming out of that. Then recently, there was this development that there was a charge about some insider trading in a fund in Cayman Islands, and that has been sort of dismissed. They're raising funds. So there have been a couple of things which have been happening on the stock, but actually if you look at the valuations the stock is trading at, I find them extremely fancy, and I don't really like it at this price. So for me, it's an avoid.
It's an avoid. What are you recommending to your clients in the NBFC space as such?
So which is what I mean. If you really honestly think that they will grow more or at a faster pace than Bajaj Finance, I don't really see that happening. Because one thesis I've also had is the fact that post this corporate tax cut, you will actually see the strong hands getting stronger. So I think that basket will continue to grow at its pace. And yes, maybe there could be a catch-up, but I don't think that they're going to outpace the growth of those. And then I think in the other NBFC space, what we've really seen is the gold financing companies which have done well. So I think that could be an interesting pocket, players like a Mannapuram or a Muthoot. So either you go with a private bank like an HDFC or an ICICI bank, which is in the banking space, or you go to an NBFC like a Bajaj Finance, as I said, or you look at some of these other gold loan companies. But I wouldn't really recommend L&T Finance.
Okay, what's your sense, Vivek, on L&T Finance? Is that something that you like?
Well, I have started to like it. For very many years I didn't like it, and I'll just give a perspective to it. L&T Finance, if you look at the performance, I mean, it has been a rank underperformer, notwithstanding the first name that it has, L&T. Between 2012 and 2018, I mean, the performance of L&T Finance was pretty mediocre, both in terms of growth, which was inconsistent, return on equity, which was averaging just about 12-13%, which also was inconsistent during that 6-year period. So there was no real trend of either rising or a steady return on equity or return on assets. And rightly so, L&T Finance, from a valuation point of view, traded at close to one-time price to book throughout this period, a significant discount to most of the other large and I would say NBFCs coming from respectable corporate houses. What has happened in the last 1 year? There are 2 things have happened. One within L&T Finance, one in the sector itself. For L&T Finance, there has been a marked improvement in performance. So if you look at last 6 quarters or so, there has been a significant improvement in the performance. So if we look at last 2-3 quarters, they have been maintaining return on equity of about 18%. So they have improved that. Return on assets is higher. Growth rates are higher. They have managed to maintain a growth rate of upwards of 25%. And so overall, there's been a performance improvement. Along with improvement in performance, obviously now the valuation also is playing a catch-up from a price to book value, which was like almost at close to 1 or 1.1, 1.2 until about 2 quarters before. Even now it is about maybe 1.6 because book value as of September end was 70 rupees, and what your screen shows 118. So it's 1.7 times price to book based on September 19 book value. If we were to look at little forward, it's probably less than 1.5 times price to book, which is still a significant discount to Mahindra Finance. Let's not talk Bajaj Finance, which trades at 7 or 8 times price to book, but say a Mahindra Finance or a Cholamandalam, all of which trade at more than 2 times price to book. The second thing which I mentioned, which is a macro, which is a sector related thing, post the ILFS DHFL saga which unfolded over the last 12 to 15, 18 months, there has been, I mean, when we talk of polarization, equity markets, there's a polarization even in the debt markets in favor of the quality names, respected names. So Bajaj Finance, Mahindra Finance, Cholamandalam, maybe even L&T Finance, they have benefited both from the fundraising point of view in terms of ability to raise funds at competitive rates, which help them improve their net interest margins. While there are a whole lot of NBFCs which are having difficulty in terms of raising new capital, either by debt or by equity, at competitive rates. So over a longer term, when that plays out, L&T actually benefits in terms of access to capital at competitive rates. It can actually elbow out and nudge a whole lot of tier 2, tier 3 NBFCs which sort of were competing with it. So things actually get better with L&T Finance here on. If they can maintain the pace of growth, maintain the improved performance, 18% return on equity, I see no reason why they should not trade at maybe 2.5 times price to book, maybe 1 year down the line. If we were to discuss this again next year, I will not be surprised if that actually happens.
Okay, Vivek, that's the view that's coming in. Except for L&T Finance, are there any other NBFCs that you've recommended to your clients in the recent past?
Well, you would recollect I am positive on Cholamandalam Finance. Also, we discussed it a couple of weeks ago, we discussed Cholamandalam. I'm positive on that as well. And Mahindra Finance.
Okay, that's the view that's coming in. Sharmila, avoid L&T Finance, but positionally bullish is the view that Vivek has given on L&T Finance. The next stock we want to talk about is basically the Adani Group of stocks. All of them have been rallying. In fact, except for an Adani Ports, which hasn't done well, most of the other, the recently hived off companies have done extremely well. Adani Transmission trading up by almost 10% in trade today. Adani Gas has been a big outperformer. Adani Green. So lots of at least 5 to 6 listed companies of Adani Group. So is this something that you would like to have in your portfolio? And if yes, which of the Adani Group is something that you would like? Vivek, any of the Adani Group stocks? What's your view on the Adani Group of stocks?
Okay, so two-pronged view. One is on the parent and the holding company, the key company, Adani Enterprises. I mean, in terms of it's only now that we are, a lot of people are fully understanding and appreciating the business model that Adani Group via Adani Enterprises has played over the last 10 years. That Adani Enterprises seeds a lot of new businesses, puts in the initial capital, grows that business, it achieves a critical mass, they hive it off, list it separately. So they did that for Adani Transmission, Adani Green, Adani Gas, all of which started as small businesses within Adani Enterprises, and now they are listed separately, and investors have been rewarded indirectly by way of hive off and list separate listings. In Adani Gas, they've also got a strategic investor in the Total, which is a French energy giant. Now, what is Adani Enterprises' business profile today besides their core business of agro commodities and coal mining, and which is linked to their power business, thermal power business? They have seeded businesses in airports, where they have won several bids in terms of building, developing and maintaining or running airports. Number one, they've got into aerospace and defense. They've got into infrastructure, which is road construction, operations, maintenance, the entire everything to do with that. Water, besides, of course, urban infrastructure, and there's a small real estate business as well. Okay, another large business which they have seeded is the solar business, which is both solar power generation as well as manufacturing of solar panels and equipment. Now, each of these businesses, if you were to think of them separately, has got a very significant growth opportunity over the next 10 to 15 years. And given what they have done in the last 10 years, I mean, in terms of strategy, probably they will grow those businesses within Adani Enterprises till it achieves a critical mass, and then hive it and list it separately, get a strategic investor, and so on and so forth. Now, if that trend were to repeat and recur for every business, I mean, maybe 10 years from now, I mean, today, if there are 5 listed entities which are all babies of Adani Enterprises, I mean, came from Adani Enterprises at one point of time, maybe 10 years from now, there could be another 6 or 8 listed entities, because those are the new businesses which are Adani Enterprises has seeded in the last 3 or 4 years. So Adani Enterprises is an interesting play from that point of view, where they create value and value unlock and list separately by So that's a conglomerate approach, where there's a clear plan in terms of what they do and how they do it. On a standalone basis, Adani Gas looks interesting to me. I mean, it's very common that I have spoken repeatedly about city gas distribution businesses, positive on Mahanagar Gas. Adani Gas is interesting from the point of view, at this point of time, their operations are pretty small, but in the recent licenses for new territories, 45 out of 85 licenses Adani Gas has got them, which of course will ensure growth opportunity for them for the next 20-25 years, both in terms of geographical expansion, volume growth, and as I mentioned earlier, they also have French company Total as a strategic investor which has pumped in 6,000 crores and acquired 37% holding. So I'm positive from that point of view, not really my core holdings, but I'm positive on both Adani Gas and Adani Enterprises.
Okay, Adani Gas and Adani Enterprises. Shamli, any view on the Adani Group stocks?
No, I'm afraid I don't have a view, because I honestly don't. I mean, for precisely the reasons which Vivek mentioned, I'm like not in favor, because I think that you're spreading yourself too thin, and there are too many loose ends out there. You don't know which of these businesses is going to do well. Then, you know, even where mining was concerned, you heard so many negative reports coming all the time, you know, from Australia, where they had holdings, etc. Some of these businesses I don't like outright, and some of the ones which yes, you could maybe talk about in favorably, like an Adani Gas or something. I think overall it's just a model that doesn't work for me, where you're spreading yourself too thin. So for me, it's a complete avoid.
Okay, Vivek, before we move on, any reason why Adani Ports hasn't performed back? Because that's the largest entity that they have. Somehow that has not performed while the other stocks have actually managed to rally.
That's true, and I mean, it's not only among the largest, among the hived off businesses, it's also among the first which actually was the hived off. I mean, this was hived off way back in 2006 or 2007. 2007 was their IPO. That time it was called Mundra Port, and then of course subsequently they changed the name to Adani Port. My sense, the reason that's probably the stock is languishing, because the growth in the port business itself isn't too attractive, and that's for obvious reasons. I mean, growth of the port volumes and revenues and profits of a port business obviously are linked to your import and export, and in a slowing economy, obviously the ports are also going to suffer. So my sense is that could be the reason. I don't track Adani Ports very closely to really talk about the numbers at this point of time, but this is my sense as to why it's languishing.
Okay, that's the view that's coming in. What's your sense on we were discussing the Adani Group stocks, and then I'll talk to you about L&T Finance also. What's your sense on the Adani Group? Do you have active coverage on any of the stocks, and overall view, and which is the best pick there?
So like we don't have any active coverage in any of Adani Group stocks, and if we see, most of the companies like are heavily debt-ridden companies, and even in Adani Port, like we were talking right now, so there are a lot of intercorporate deposits, and so not to my mind there is economic slowdown is hurting Adani Port. Regarding Adani Gas, definitely there is huge prospects because of the geographic additions that they will be doing, but I think the price to book doesn't favor too much, because already it is discounting. If you compare IGL with Adani Gas, you'll find that the valuations are too compelling. So I think at this point of time, I don't recommend any of the Adani Group stocks.
Okay, you don't recommend. We also discussed L&T Finance as a stock, because that has rallied. What's your sense on the counter? What's happening there? Why the recent rally, and what's the outlook?
So maybe, you know, I don't know why it rallied, but yeah, maybe because the valuations became too compelling. And but if you look at L&T Finance, the entire portfolio of L&T Finance is more of wholesale. And even on the wholesale side, more on the real estate, the lab portfolio. So recently, management is taking efforts to get into more of a retail books, but I think that will take quite a lot of time, you know, to stabilize. And if you look at the provisioning, it has increased over the last 2 years. Quarter on quarter, the provisioning have been increasing. So it's a good stock, but then I don't think in this volatile environment we should add more of L&T Finance. Instead, I would recommend if you want to take a housing exposure, we can go on for a Canfin Home, or if you want to take a retail exposure on the NBFC side, still Bajaj Finance would be a better choice than L&T FH.
Okay, that's the view that's coming in on L&T Housing Finance and the Adani Group. The other interesting play is the movie names. Today, Inox Leisure has managed to do well. Over the past few days, PVR has actually rallied. What's the outlook? Are valuations now becoming a concern, or will this rally actually continue in some of these stocks? So PVR is something, and if anyone has a view on Inox also, yes, we can talk about that. But Vinit, I'll start with you only. Your view on the multiplex space.
So we are quite positive on the multiplex space, especially on any of the consumer discretionary services side. So I think we're liking this space. Movies as such, the demand to go and watch it on screens, I think that will stay here, and it's a good opportunity. Definitely PVR is expanding the the multiplexes size. Numbers are increasing year on year. They have a good set target of 80 to 100 screens that they are expecting to add. Valuations definitely are a concern as of now, but I think, you know, keeping 16 to 18% growth that we are factoring in for some 5-6 years from here, I think it's a good stock to be in. So I would not say go in straight away buy PVR, but any sort of a correction in the overall market and a day or a month where the underperformance is there vis-a-vis Nifty, one should accumulate PVR.
What's your view on Inox?
So I think I have more liking towards PVR given the kind of margin scenarios or the kind of but all in all both are into the same business, but I have a preference towards PVR because of its the balance sheet and the way it is being managed.
Okay, that's the view. Vivek, what's your sense on PVR, and if you have a view on Inox, which is a better one?
Actually, from the valuations point of view, I'm not comfortable with either, both PVR and Inox, although they have done well recently. Multiplexes are capital intensive businesses, and they reach, a single location reaches its maximum revenue potential very soon, maybe about 4 to 6 quarters, because maximum occupancy that a multiplex can do is on the higher side, about 40%. Average is about 35% occupancies that multiplexes do, because from Monday morning to Friday afternoon, the occupancies are terribly low. It's probably in single digits. Friday afternoon or Friday evening to Sunday night is when much of the where practically all of the revenues and profits are made. So 40% occupancies reaches on a single location, reaches its revenue potential very soon, where there is also a limitation as to how much the ticket prices can be increased year after year. That's number 2. Number 3, and hence to sustain the growth, they need to keep adding more and more properties, which calls for a very large amount of capital investments from that in that sense. Third thing, a very large profit contributor, more than 50% of the profit contribution at an EBITDA level, coming from food and beverages, which is a very good model. But now that regulation allows outside food to be taken inside the theaters, would hit the F&B revenues to some extent, because a lot of these properties are inside malls, and malls have food courts which offer much wider variety of food, which inside the theater your variety is obviously going to be much more limited in that sense. So it could hurt PVR's revenues and profits at PVR or multiplexes revenues and profits from that point of view. Now, I'm not disputing the fact that we are a film crazy country and we love our films and actors and so on and so forth, and it's not uncommon for a lot of films to do more than 100 crores or more than 200 crores of box office collections. I'm not ruling any of that out. I'm with that, and I'm also part of that same ecosystem in terms of discretionary spending that Vinita was talking about, or which all of us talk about. But from a valuation point of view, PVR at 1800 trades at 55 times current year earnings, maybe about 47, 48 times next year earnings, for a return on capital, return on equity, which on a long-term basis is unlikely to be beyond 14-15%. Now they are doing about 16-17% they are doing, but over a longer term, as I mentioned, with the capital intensive nature of the business, normalized return on capital and return on equity is unlikely to be more than 15%.
Okay.
For a 15% return on capital, return on equity business, paying 50 times valuation, thinking that it's a consumer play, I think it's slightly on the higher side.
Okay, and Sharmila, what's your sense on PVR?
So if I could talk about both PVR and Inox, obviously I think some ground has been covered in terms of the fact that we will still continue to go to a theater to watch a movie. Yes, I think OTT is there, but to my mind, the content on both will be different. So I think if you were to just compare both, both have very interesting things happening in their respective spaces. PVR has just opened a superplex, as they call it, in I think somewhere in the Delhi region, where they have about 12 theaters together, where in all the 4 formats. So you have an IMAX, you have a 4DX, you have the luxury edition, as well as normal theaters. Inox similarly has one in Mumbai, which they call a megaplex, which is in Orbit Mall. So both have sort of positioned themselves to take care of the fact that going to the movies, going out to a theater to watch a movie is going to be a different experience going ahead. It is not going to be that old style one theater concept where you go and you just watch a movie and you come out. You have to give much more than that, and I think they've been delivering on that. Secondly, I think in the coming 2 quarters, they have some very interesting movies lined up, which are going to get good numbers for both Inox as well as PVR, because once you get into the holiday season, you get all the big names really having their releases lined up, and that's what we are going to see. There has been another development in PVR where they are tying up with somebody called Mubi, which is a completely new concept. So you need to see how that also plays. So when you compare both the two like on like, you find that PVR is at a much more expensive valuation, and Inox has caught up. Inox has caught up in the average ticket per user. There they've seen they've closed the gap from which used to be earlier 16 rupees to I think it's come down to 6 rupees. They've closed the gap in the food and beverages, the margins. They're almost neck to neck with the kind of margins that PVR makes. Where I think PVR wins is the advertisers still seem to prefer PVR. So I think both have something going for them, but I just prefer the valuations of Inox, so I actually prefer Inox over PVR.
Okay, that's the view, and we have time to slip in the last stock also. One stock, Nifty is trading at record highs. However, some of the mid caps and small caps haven't performed, but one expensive stock in terms of valuation, which probably could correct as per analyst. Very quickly, what's your sense? Which stock and why?
Well, I don't have any particular stock as to what can correct. Basically, the theme in terms of what stocks can correct sharply could be only 3 reasons. Stocks are at elevated levels when it comes to valuation multiples relative to return on equity, return on capital, relative to cash flows, and relative to, of course, the growth rate. So the companies which disappoint on growth rates or actually have fall in earnings, or companies have either management issues or corporate governance issues, or third, companies which have balance sheet related issues, I mean over leverage and so on and so forth. One of the 3 factors probably will give in for a lot of the stocks that we are talking about, which seem to be overpriced. It's difficult to say which will happen when, but I still think the problems in the financial sector, NBFCs and banks, is still not gone away. So we could probably see some continue to see some negative surprises in that segment.
Okay, Sharmila, which stock?
Well, I'll go with Bharti Airtel and Vodafone.
Okay.
Because I think, yes, they've taken a price hike and market seems to be cheering that. But, I honestly think that you need to see how really the users relate to this big price hike that they've taken, because one is, I think, 40% and one is a little bit more. And I think the AGR issue has just been postponed. You just have 2 years to pay the money, but essentially you're still paying interest and you have to still pay the money. And then where do you get money to expand on in the meantime? And we've seen the kind of numbers that both are delivered. And interestingly, like while you saw the stocks correct when that whole AGR issue was getting talked about, now you have the stocks do a complete rebound and they're trading at historical highs. To my mind, that's a completely ridiculous situation. I think even if there had been a minor, little bit of a bump up, because yes, they have that 2-year breathing space, it was fine. But now you have them really just going through the roof, and to my mind, that just escapes logic. So for me, I think this is something that is going to show in the price very soon.
Nita, what's your sense?
So currently, I agree with both the participants, and I think it's we have to watch how the earnings pan out and look obviously at the valuation at current level. I think some of the consumer staples may take a downturn, because see, if you look at so my sell pick or a neutral pick would be Dabur as of now. Because we have not seen any kind of so sales since 2016, sales have grown by 3% CAGR. The net profits have grown by 5% CAGR for the last 3 years, and the market cap has almost doubled. So from 44,000 crore to almost 80,000 crore. So, and going forward, most of the consumer staples, they have got the market share because of the unorganized shifting to organized. So as such, there is an increase in the, but I mean, on the staple side, we do not see too much of a volume growth happening going forward. So it will be a minimum 5 to 7% growth that we can discount for. And price taking a price hike will not be that easy. Moreover, we are seeing, because of lot of competition, the ad expenses where they usually have a lever will be curtailed, because they will not be able to pass on all the. So currently, even in Dabur, we have seen they're not able to pass on all the gross margin expansions to the EBITDA margin. So I think margins have already peaked for Dabur, and volume growth and the top line growth will not be that high to warranty the kind of price to book that they are trading at. So 12 times price to book for Dabur, and 54 times price to earning for Dabur right now. I think either it should go for a price correction or a time correction.
Okay, that's the view that's coming in. Dabur, some of the telecom stocks has been spoken about, some of the expensive consumer stocks have been spoken about, but with that, we're completely timed out on this edition of Hot Money. Let me thank my guests who come in. Vinita, thank you so much for coming. Sharmila, Vivek, thank you so much for coming in today. Ask BQ comes up next. Stay tuned to BloombergQuint.